Are you looking to become a better real estate investor? Then hang on, because you're about to experience another episode of the world's most popular real estate podcast, the BiggerPockets Podcast. But before we get to this week's show, I wanted to invite you to become part of our community, BiggerPockets.com, the real estate investing social network. The membership is free, and you'll instantly gain access to networking opportunities, educational content, investor tools, and more. Sign up now and get a free copy of our book, The Ultimate Beginner's Guide to Real Estate Investing, read by hundreds of thousands of budding entrepreneurs. Just click this link right here or just head to BiggerPockets.com. With that, let's get to the show.
This is the BiggerPockets Podcast, Show 13.
You're listening to BiggerPockets Radio, simplifying real estate for investors large and small. If you're here looking to learn about real estate investing without all the hype, you're in the right place. Stay tuned and be sure to join the millions of others who have benefited from BiggerPockets.com, your home for real estate investing online.
Hey everybody, I'm Josh Dorkin, your host of the BiggerPockets Podcast, here with my co-host Brandon Turner. What's up, Brandon?
Hey Josh, not much. Things are pretty good. I closed on a new property this week, so that makes me happy.
Fantastic. Always exciting to close on yet another property.
It is. I wrote about it over on the blog, so people can check that out if they want to know the dirty details. But yeah, it's good. So
no, that's awesome, man. Well, you know what else is awesome, Brandon?
What else is awesome?
Speaking of awesomeness,
Josh.
Awesome is 100,000. Do you know why 100,000 is awesome?
Is that the amount of money that you're going to give me today?
That is certainly not the amount of money I'm going to give you today. However,
tomorrow.
That is, no, not tomorrow either, Brandon. 100,000 is the number of times our podcast has been listened to up until now, up until at the time of this publication of this podcast 2 days ago. So
that's awesome.
we have eclipsed the 100,000 listens milestone, which is, I think it's pretty cool. I mean, 12 shows and 100,000 listens, not bad.
That's not bad at all. That's great. I'm blown away by it, just the sheer number of people who listen to this show every week. Yeah, it's awesome. It's really, really refreshing to know that people like what we're doing. So I like being liked. That's a good thing.
Yeah, well, they certainly don't like me. So
I'll take all the credit for not our guests, not you. It's all me. So
this is Welcome to the Brandon Podcast, starring Brandon Turner with guest host Brandon Turner and guests Brandon Turner.
Yes. Well, speaking of guests, we have an awesome guest today. Somebody that's fairly new at real estate investing. Leon Yang. He's from the Las Vegas area, and Josh, why don't you tell us a little bit about Leon? You knew him before I did.
Yeah, well, so Leon is an interesting guy from Brooklyn, New York in the house, who was born in China, raised in Brooklyn. Originally set out to go ahead and get an MBA, and Leon, I guess, decided that the best education he was going to get would be by just hitting the street and getting into real estate investing. So back in 2011, he started investing in Las Vegas at pretty much when the market was pretty close to bottom. And he's been buying houses, flipping, and borrowing money from strangers ever since. He's definitely an interesting guy. He's got a perspective that we haven't yet seen on the site, and we'll get into that a little bit. What's cool, I think, is exactly he's a newer investor who's really, really savvy, who understands the economics of real estate, and we'll get into his strategies further on. But before we start, though, let's go and knock this thing out, man. We got today's quick tip. Today's quick tip is the using BiggerPockets for your business. How to use BiggerPockets to grow your business. We put out a free ebook on how to do this. It's got some awesome information. Whether you're a big company who operates in the real estate space or somebody who's got a small business in real estate, this ebook has pretty much everything you need to know on how to grow your business using the BiggerPockets platform. So you definitely want to download this thing, check it out. And we will have the link in the show notes at biggerpockets.com/show13. There is a short link to it, which is biggerpockets.com/biz, and that will be the quick link to the PDF, biggerpockets.com/biz. So enough of Brandon and the Brandon Show and Josh as his cohort. Why don't we get to our guest, Mr. Leon? So welcome to the show, Leon.
All right. Thanks, Josh and Brandon. Quite excited. Thanks for having me.
Yeah, thank you. This is going to be great.
For sure, for sure. All right, man. Well, let's just jump right into this thing. How did you become a real estate investor?
Wow, it's quite a long story. I mean, I'm very entrepreneurial. I grew up around an entrepreneurial family, so I always wanted to run my own business. And I did do that one time coming out of college, trying to help my family build their business, but it was quite challenging. So then at that point, I kind of considered about going to get an MBA and wanted to maybe give up and go to a 9-to-5 job. But, you know, I've at one point I read the book Rich Dad, Poor Dad, and, you know, got me really excited about real estate. And my family had a lot of experience in real estate too. So, you know, and this point, it was in 2011. So I thought it's a quite interesting time to be in real estate. Once I started following the market, and I thought, wow, you know, and I grew up in New York. So I was looking at houses in New York where it cost $600,000 for two-family, small house built in the 1940s. And then I just look at the biggest foreclosure markets in the U.S., which at that time was Vegas, Orlando, Miami, and Phoenix. And I was seeing houses that were selling for less than $100,000 and condos that were selling for less than 30, 40 grand. And I just couldn't believe my eyes. You know, I thought either the computer was playing a trick or I really had to find out what's going on.
Nice.
So it was that really, you know, and I was looking at the rental rates. You know, the rents were pretty normal. You know, for a house, it would be about $1,000. And, you know, for condos, it was maybe about $600, $650. So I started kind of working the math, and it just seemed to make a lot of sense. So in 2011, July, I just kind of flew down there to all three cities and just wanted to get started that way.
Wow. So you hop on a plane out of Brooklyn. You hadn't quite gotten your MBA, or had you started or no?
I actually got accepted to a couple of MBA schools, but at that point, I decided this was the better opportunity for me.
Okay.
It's an opportunity that I think wouldn't have lasted that long. So
right.
I had to make a decision. So I decided to get into real estate.
And how did your parents feel about that?
I think they've been very supportive in what I want to do in terms of entrepreneurship. So, you know, they looked at the prices and they couldn't believe their eyes. They just say, wow, this can't be true.
Sure.
You know? And that point, my parents have invested in China too. So it's just the way they compare prices is just night and day. So my dad just say, okay, I'll hop along with you. Let's go to all these cities and let's find out what's going on. You know, at that point, we didn't know what the cities would be like. You know, it could be completely barren. You know, people would have left. It could have been looking like a zombie town. We just didn't know. So we had to kind of hit the streets and find out.
Now, Vegas does look like a zombie town. You know, depends on the time of day. You know, all the people walking around, you know, drunk and broke after losing all their money gambling. But
is that a story?
Yeah,
I sense a story coming on there, Josh.
there's no story. But I had a story with the MBA question. I mean, you know, after school, you know, I got into the entertainment business, and my parents were definitely not happy about me making that decision. And so, you know, I just know that families, you know, certain decisions they approve of or they don't, and it just kind of popped in my brain. But
I was going to go to law. I was going to go to law school, and that's similar story. My parents weren't real thrilled when I said, I'm going to invest in real estate instead of go to law school and make six figures. So
And look where you are now.
And look where I am now on the Bigger Pockets Podcast Show 13, which you can get in the show notes at biggerpockets.com/show 13. You like that?
Yeah, that was a great plug. Good plug. All right. So you get on a plane, you hop down to Vegas, down to Miami and Phoenix. How did you guys decide which of those markets that you liked the best and ultimately settling on Las Vegas?
It was the zombies. That was kind of what we decided. No, well, in all seriousness, I just saw that Vegas was kind of, to me, it was surprisingly diverse in terms of their economics. They have military bases. They have a lot of trade shows, conventions, a lot of distribution, very business friendly, landlord friendly. So it was surprising once you get out of the zombie town, out of the strip into the different areas. And being that is close to California, and I just thought that, it's a better market there. And also I feel like no one's really wants to go visit Phoenix or Miami, Orlando as much as Vegas. So it was a little bit of, hey, Vegas is pretty exciting. It's close to California. I think it's and it has a good, diverse business all over town, and it was growing rapidly. So I thought it was a pretty good town to be in.
All right, man. No, that's great. So you decide, you go to Vegas. Vegas has all this opportunity. It's a great town. The market was, in the absolute floor. You decide to get into this. Tell us about your first deal. How did that go? What was it, and how did it go down?
Yeah, it took me about probably a month before I found my first property. I wanted to buy and hold property, and I had to get familiar with the town. So for quite a month, I was just driving to every street, trying to figure out what's a good neighborhood. I wanted a good rental. So I spoke to quite a few agents and finally found one that they do a lot of rehabs as well. So they buy foreclosed homes, rehab, and sell it to investors. So I thought it was a good way for me to get exposure to that, because I wanted to fix up broken homes and get a better deal that way, instead of just buying straight off fixed up properties where I may be paying, maybe 20% more. So it was a good learning experience for me to get started. So we bought a house. It was in a great neighborhood. It took quite a long time, but the first house I got, it was cost about $107,000, and we spent $7,000 to rehab it into a good rental condition, which we ended up renting it for $1,150 a month. So that was a pretty good return. But later on, I kind of realized that I've paid way more than what I should have in order to rehab the place, but I was very inexperienced. So that was sort of my launching point to start learning more and get involved with every aspect of the real estate, rehabbing, buying, renting, so that was my launching point.
Gotcha. Okay. So now that was a single family, yeah?
Yes. A single family, 3-bedroom, 2.5 bath.
And how did you end up financing that? Was that just through your family, or was that something? How'd you go about it?
Yeah, through my family. That's what I did through the first couple of deals before I started getting financing on my own. So it was sort of a launching point for me to start. And then by 2012, I was just doing all of them private seller finance.
Gotcha. Okay. So private seller finance, why don't we talk about that a little bit? What does that mean? For the newer folks listening, how does that work? What does it mean? What is private seller financing?
Sure. Well, let's just start from the beginning. All I wanted to start was I wanted to build a bigger portfolio. So I knew in order to do that, I have to find some sort of financing to really make that work. But at that point, I don't have a job. I don't have the W-2s to go to a bank and say, hey, I want to get a bank loan. So my idea was really, it came out of actually attending the BiggerPockets conference in Denver.
Nice.
And it got me to start. Yeah, it was great. I mean, I started learning all this about private seller financing, which is really going to the seller of the house who actually financed my purchase of their home. So if, say, for example, if Josh has a house and it's worth 100,000, he may be willing to say, you know what, Leon, if you put $10,000 down, I will sell it to you for 120, but I will give you the loan. So for 100, I'll finance you that $110,000 part, at whatever interest rate I want it to be, maybe 5%, maybe 6%. And then, I'll let you I'll give you a loan like a bank, maybe for 15 years, maybe for 30 years. So this is where we start negotiating, so that Josh, on one hand, gets, an income for selling their house. And for me, I could get a financing and I could put very little money down to buy a property.
That's great. No, it's a good tactic that certainly a lot of people use. And is that what you're using today as your primary source of financing? Are you pretty much focusing on scooping up those seller finance deals?
Yeah, that's really what I want to do now, because it allows me to really quickly expand my portfolio, because with bank loans, sometimes you might hit a limit of 10 properties and then you're stuck and you have to figure out another way to finance it. So for me, I'm able to do this with, unlimited number of houses, and I can sometimes I've put as little as $5,000 down for a house before. So it's all about trying to put as little money down, get as much financing as I can. And I think it's just a good opportunity. And given my circumstances, it works well for me.
So how do you find those sellers? I mean, not everybody can just carry a loan, right?
Yeah. Well, actually, I've been finding them on Craigslist, surprisingly.
That's cool.
I look for ads out there, if it says, I'll type in keywords like seller financing, owner will carry, OWC, 15-year, 20-year down payment, keywords like that actually allows me to find, different sellers who are looking to sell via financing. And most of these sellers I do find, they typically tend to be older people who have multiple properties. They have it all paid for, free and clear, or they have it, they have some sort of financing on their own. But these are the type of investors who they got tired of landlording. They don't want to manage anymore, and they just wanted a consistent income. So that's how we get our conversation started. And they more or less know what's going on with their financing, how to finance it. So they're typically a bit more experienced, and it works. So we are able to work a lot easier that way because they know a bit more.
No, that's great. Well, can you walk me through? All right, I'm a brand new investor. I say, hey, this is a great idea. I want to buy, these owner finance properties as well. I go on Craigslist and I type in some of that stuff, some of those keywords, and I find something that looks like a potentially good deal. You get on the phone and you call these guys up. How does that conversation go? And, what's the whole process of setting this thing up?
Sure. I do have sort of a specific strategy. When I start, I don't go into it saying, hey, I found your house on Craigslist. I want to buy it. What's the price right now? Let's negotiate, right? The point is to get to know them. Why are they selling? What are their wants? What are they looking for? You have to sort of get to know them first. You have to build that rapport so that, this is going to be for all seller finance deals. This is a long partnership where you're lending me money for 20, 30 years. So there's a trust, and there has to be that kind of trust built into it. So we have to get to know each other better. So if I were to call you and try to buy your house, my first questions are going to be like, hey, Josh, why are you selling? What do you do? What's going on in your life? We just get to know each other first. So I do that typically about 2 or 3 conversations before we get into how to buy it. So I would approach it as my strategy is usually how much less I can put down, because the less money I can put down, the higher leverage I can get. And what are some of my requirements is that if I have to make a monthly payment, including all the expenses and such, I would like to make sure I could get a rental income similar to that. So it sort of breaks even. Obviously, I could get more rental income compared to my expenses. That would be great. But I try to maintain that so I don't go too negative, because if I have to fill in money every month it gets tough because there's only so many properties you can do before you have to shell out lots of money. So my focus is really payments and my down payment. Price, ultimate selling price, I'm a little bit more flexible because you have to remember that this is a long-term investment. So if you're going, what's the really big difference between 120,000 and 140,000? That's something you worry about way far into the future. But what's important now is what you have to pay right now and what you can afford to pay monthly right now. So that's the type of approach I go with when negotiating for with a seller financed property owner.
So are you looking for, because you had said that cash flow for you're okay with, I guess, those break even numbers when you're picking these things up. Is that because you're focusing somewhat on the potential for appreciation, or why would you? For me, if I on any type of income property, I'm always going to be looking for some minimum number on income after every expense, after my note, after taxes, insurance. I know some people say, hey, break even's good because if I hold this property for a number of years, then suddenly I've got my equity built up. What's your strategy on that?
I would say I'm a huge speculator. From when I first looked into the real market in Vegas, well, this is for me specifically, I knew that homes were selling for $300,000 in 2006. That's dropped below $100,000 in 2011. So I'm looking at it as, well, the market is going to rebound. That's definitely going to happen. I don't know how long it might take. It might take 5 years. It might take 7 years. But as far as I'm concerned, I believe that the market will go back up to 300. So how I would look at it is to say, well, I'd rather own a property that I'll have to break even. If I could get one more, every additional property works really well because I have been buying them between 120 to 150. So if it ever goes up to 300 again, I stand to gain a lot more. So I'm really speculating, but I'm watching out for my monthly payments to make sure that I can do it. But I'll definitely take a deal if it's break even, just because I want to add an extra one to my portfolio.
So your strategy then is build a sizable portfolio of discounted properties that at the minimum break even, and in the event that we see the turnaround that a lot of markets are seeing right now. In fact, the big news today is Washington, D.C. are seeing the highest prices ever. I know here in Denver, prices are skyrocketing again. Your hope is let's just see that appreciate, and then what then do you sell out? Do you refi and pick up more properties? What's the decision at that point?
Well, it really depends on the market. If it gets up to, say, 300 again, or when it gets a little crazy, I would rather pull out equity out of it, refi if possible, because that's money taken out that's not taxable. It's not taxed. So if I were to sell everything, then I would have to pay a capital gains tax, and that could end up being a huge amount. So with that, I can pull out, and I could also still keep the property. Who knows? It might go up again. So that's kind of the strategy.
So what if in 5 years or 10 years or 15 years, it hasn't, what if it hasn't gone up and you're still sitting on these properties that are break even? What do you do then?
Well, I will have to say that in 5, 10, 15 years, the rents aren't going to be the same. It will probably go up. If you look back at what you pay for rent 10, 15 years ago, it's a lot different than what you're paying now. However, all my debts are fixed, so the payments are going to be fixed. So in 10, 15 years, those payments are actually going to worth a lot less. And also because of the benefits of paying down the debt in 10, 15 years, my debts are going to be a lot lower than what I have now. So even if it doesn't appreciate, I can still gain the benefits of higher rents, fixed payments, and things like that.
So it's kind of a win-win-win no matter what happens. I mean, even if the worst happens and you break even for the next 20 years, you're still not going to go bankrupt and run out, Yeah, it's not that bad. So it's definitely an interesting, strategy. It's different than what a lot of people do and different what I do, but that's why I love talking to different investors here on the podcast, because everyone has their own method of investing. And it's not a bad idea. I know I couldn't do that. Like, I wouldn't do that in my area because I don't have any appreciation in my area. We don't swing like the rest of the country does as much. But Las Vegas, I know you guys go up and down quite a bit in places like that. So
I used to be a stock trader, so we would look for, we would chart and set up, look at different things. I mean, I remember I used to trade, certain stocks, and I'd watch for that thing to be between a certain range. And basically, you knew the low, you knew the high, and you just kind of watch it. You'd try and jump in at the low and, pop out when it was starting to get to the top of that range that it was consistently selling at. The market changed. It stopped doing that. And my strategy didn't work anymore for me. But, obviously, there's definitely, as Brandon said, I mean, there's certainly various strategies. It wouldn't be one that I would do, but like he said, I mean, I think it's cool to hear, that there are so many different paths that other people will take, and we can all learn from each other with these things. So it's great. Now, what are some of the dangers? What are some of the negatives to seller financing? Is there a downside to it?
Yeah, there are definitely some downsides to that. With every additional property you borrow from, even say if you're cash flow positive or break even, you're taking additional risk because you could have that one extra property having vacancy or major repairs. And if the more you have, the more likely that several of them are going to happen at once. And so with that happening, say if you had 20 houses and 5 of them go vacant, that's huge hit on your cash flow, as opposed to if you had 5 houses and 1 of them goes vacant. So then you make sure that you have to have a huge cash reserve in the back, just in case any of these things happen. And if you have that cash reserve and you get used it up and you can't replenish it, then you really know that you're actually over leveraged yourself and you're putting yourself into a lot of danger. With that being said, a lot of these seller finance properties are done on a one-to-one basis. So, if things doesn't work out, you can let one go. You won't lose it all at once, as opposed to, say, maybe if you have a bank loan and you go default and, you might have to, you could lose them all. But, so those are dangers that come with borrowing too much.
So, and I know I'm harping on this. I have friends who will buy properties without cash flow, and it frustrates me because I'm 10 years ago, 15 years ago, I might have done the speculation thing. I can't do it today. I can't wrap my head around it because to me it's way too risky. If you can find these deals and these opportunities that break even, can you also then not just hold on a little bit? To hold out for maybe deals that do cash flow, or I mean, it just to you, it just doesn't matter because the other strategies, the other exits are in play, and it just it works.
Well, yeah, and really that sort of depends on the market, as in the market in Vegas, and I'm sure in a lot of different places there are really no inventories right now, and because of that, you sometimes have to, chase a little harder. Definitely when I first started it, I was able to find some of the better deals where I could be a bit more cash flow positive. But with the run up in the market, with no inventories, sellers who carries tend to have a bit more say. They could actually demand a bit more than what I can get. So I have to make some of the trade-offs. With that being said, the reason I'm willing to speculate is because in Vegas, you can't build a house at the prices I have been buying for. So I knew that there's no way prices will stay that way. Otherwise, no house will ever get built again in that city. So I knew that eventually it would go up. And another interesting thing is I looked at my insurance policy and I see my property coverage, exceeds the price I pay for the house several times sometimes. So when I asked them why they do that, they say, well, this is what it will cost us to rebuild you the house. So I knew that there was a room there to grow. And, given what's been happening in the Vegas market ever since I started, it has already jumped, 30 to 50%. And I think it will only go up higher, but it may take a bit longer time.
Got it. Now in a market like Vegas, I see that making sense, buying for less than the replacement cost of the property itself. But then you can say, hey, well, why not? I can do that. Let me go to Detroit where I can buy a house for $4. And, I wouldn't be caught dead doing that. You couldn't give me a $5 Detroit house because I don't want it. And
right.
The replacement cost is certainly more than the $5,000 or $10,000 you can pay to get a house. So your strategy may work in a place like Vegas where the city's growing, the city's still doing well, but you want to be careful to avoid a city that's kind of dying like a Detroit.
Right, exactly. I agree. And that's why you have to go see the city, go see every block, see what the stores are doing, see how the people are, see what the economy is like. You have to do that kind of research in the market you want to invest in before you come up with your investing strategy. So you have to definitely visit the city first.
Yeah.
I think
I just wanted to make that point because, I worry that somebody listening might say, oh, well, I could get cheap properties, in Detroit. And sorry, Detroit, I am going to pick on you. But hey, I could get these cheap properties there. Maybe that strategy will work for me. And I would personally say, do not do this, period.
Yeah.
Yeah, I think it's all about knowing your market.
Yeah,
definitely. Well, cool. So, I guess we talked about borrowing money a little bit. So let's go back to real basic. Some people are totally opposed to borrowing money. And I wanted to get your thoughts on that because I know you've talked about that a little bit on the blog and stuff. But so I guess fundamentally, why do we borrow money? I mean, what's the idea behind that?
Well, fundamentally, I think the borrowing money is really to get you to the ability to do something that you normally wouldn't be able to do, right? If you had to buy the house with all your money, you're spending a huge amount of capital, which not everybody have. I mean, you could be, for $100,000 house, if you could pay $10,000 to get it, it's a lot different than just paying $100,000 all cash. So it's about being able to do something that you can't do normally. That's the first reason. And then the second one, I think right now, given the low interest rates, interest rates have never been this low before. And if you could get a 30-year fixed loan on this kind of interest rate, just think about, what happens if ever interest rate would go up. People might be, if you look at the past history, people have paid 18% interest rates before, and here you are paying 3 to 4%. That's huge. And then you have to look at the economy as a whole. You have to sort of study the economy. And right now, I think we'll be hitting a lot of inflation because Bernanke just likes to throw money out of helicopters. A little too much, I think. So that when I study the market, I've seen what happens when he throws money out because US dollar is, it's traded all over the world. You start to see inflation going all over different countries with dollars flowing into them. And you could see what happens is that, inflation kind of destroys a lot of things. But, one thing that inflation doesn't destroy is the value of your debt. If you owe $100,000 and inflation went up 100%, in reality, you really owe $50,000 now. So that's a huge trend that I think we'll be seeing in the next 3 to 5 years with inflation coming back around to the US. And if you have debt, that means your debt is just going to go lower and lower. So with a 30-year, 3 to 4% interest rate kind of debt that gets devalued even more, it's almost like a no-brainer. You have to borrow money if you can right now.
No, that makes sense. Interest rates, I just got a loan for, I think 3.5%. And that's on a primary residence. But yeah, still, that's ridiculously cheap. So definitely I'm one of those, I like to play that math game. If I can borrow it at 3.5 and I can, make 15 or 20 or 30, obviously that works out. There's a part of me though that still tries to I'm a big fan of Dave Ramsey and, paying off debt and getting out of debt no matter what. I'm very split. I have kind of a dual personality. So I kind of treat my business with the playing the math game, and I try to run my personal life with get out of debt as fast as possible and lower expenses. So, I definitely, I hear you there. So let's go over to a little bit. Let's talk about people who want to get into real estate investing, because you're fairly new at this. So you have a little bit, I think, fresher insight on what you got to do to get started. So maybe what are some skills that you think are really important to succeed in real estate?
Well, I think the first part I would say is education. You have to get a good financial education. You have to understand things like the time value of money, amortization, budgeting, interest rates, inflation, banking. All of those really plays a huge role, all around real estate, as much as you don't usually think about it. But as you can see, what we've spoke before, I didn't come up with my investing strategy without having a long-term understanding of what the market could be, what I can do with debt and things like that, which are very important to building a good, successful real estate business. It's not just about being a good landlord or finding a great deal. You have to look at a lot of things long term. So that's the first one. The second one I think is very important is the people skills. Real estate is really a people business. It's not about just say, hey, let me find an agent. They would go through MLS and find all I need. I just need to look at the numbers. You have to talk to people. You'll be talking to sellers. You'll be talking to other investors. And, it's like BiggerPockets. It's a community you have to get involved with to help each other out. And that's where you learn the tips and tricks. You learn the good strategies, a lot of insights, none of which you will be able to get if you're not a people person. So it's all about, you have to build good rapport. You have to, come across as an honest person. You have to be trustworthy. Reputation, as Josh always used to say, is extremely important. So you have to have a good reputation. You have to keep to your word. And, as long as you do all those things, deals will come. People will come to you. You'll get help. You'll be able to help others. So that will really build your success. And I've seen that happen, thanks to me really starting to get involved, attending BiggerPockets, reaching out to other investors, and really learning how to communicate better with people. That really built my business in 2012 and really allowed me to expand my business. I've never thought I could do it, but that was really tremendous. So those are the two main things you have to have, I feel.
No, that's great. And I still think reputation is important, and I still think credibility is important. Yeah. It's amazing that I think most people don't realize how important it is. And what kills me is when I see new people come onto our website and they start off their careers by lying, and that just frustrates me to no end, because I can't tell you. I mean, I know almost every guest we've had on the show has talked about credibility and reputation. I know the people that I know and respect the most all talk about it. And the people who are successful, they focus on that. And so, if you start by lying and, manipulating and just, pretending to be things that you're not, it's such a dangerous path to take. Hey, I've got deals in 50 cities. Yeah, and I've got somewhere between $500,000 and $10 billion to lend you, Brandon.
Well, I work with a network of investors.
Oh yes, I do have a network of investors myself that I tend to work with from time to time. Yeah. So no, listen. I mean, the credibility thing is really important, and no, I'm really glad that. You mentioned that. Now, so you're, what's interesting about you to me, and one of the reasons we wanted to have you on the show is, you haven't been doing this for 10 years. You're a pretty new investor. You're a very smart guy, and you bring a pretty interesting perspective. But so you haven't been doing it for too long. That said, we all have our little emotions when we do things. And, I love BiggerPockets every day, except that one day that it drives me nuts and I fall out of love with it. And then the next day, Brandon, smacks me around and suddenly I'm back in on it. But what about you in real estate? Have you ever fallen out of love with real estate?
Yeah, I've definitely have fallen out of love before, and it all started at one point early in 2012 when I was doing a lot of deals, trying to buy several houses a month, finding tenants, doing the rehab, running around town. I was doing more than 12 hours a day on the field, and when I get home, I was on the computer looking for different deals, several hours. I just talked real estate all day. I was just at one point, my ex-girlfriend was just like, "You're boring the crap out of me." And I think it's that kind of thing where, I had no time for anything else. And
Wait, is she your ex-girlfriend because of real estate, because of the 12 hours a day?
No.
Okay. Okay, we'll move on.
Maybe.
Real estate and relationships don't go together.
Yeah, it's challenging, definitely. For people who could do it as a couple, I have a lot of respect for that. But yeah, I mean, I was driving all day, I was grabbing whatever I can eat. I really think there's a positive correlation between real estate, hard work, and the size of your belly. Like, it was just like, it was a healthy lifestyle. I was starting to hate it. I was just saying there was a lot of stress, there's a lot of stuff to do, and my mind was all over the place. So it took me a while before I realized, I do need to find balance. As much as I love real estate, I have to strike a good balance between real estate and personal life. I started kind of changing that concept because I realized, yeah, you could chase that extra dollar, but at what cost? You might have to sacrifice a lot more to take it to a new level, but you have to strike that balance. Otherwise, it's too difficult. So I kind of start taking a little bit of a step off, trying to get a good balance. I started eating better, exercising more, doing some traveling, and pursuing my other hobbies or interests, and that kind of, it makes me feel better. It's, at the end of the day, while you're doing all this, if real estate fails, at least I had a good time, doing it. That's kind of, I feel like it's good to approach it that way. So, and real estate is a long-term game. Yep. You'll be doing this for 10, 20, 30 years. You don't want to burn out at the third year or the fifth year. You have to last until the end. You have to cross that finish line. And if you run too fast, you might just end up burning out and get out of the game before you really, truly get all the benefits.
So 80 hours a week of work isn't healthy? No. Come on.
Well, you look pretty healthy right now, so I guess not all of us can do it.
It's not healthy. Trust me, it's not healthy.
Well, I want to point out real quick that there was an article you wrote that you talked all about this on the BiggerPockets blog. It was called "What is Your Real Estate Lifestyle?" And it was actually probably my favorite blog post that's come out in months. I really liked it because you talked about all this stuff that, there is a place for hustle, and there's a place when you're starting out and you're working a full-time job. I mean, you got to work, and you got to work
hustle.
You got to hustle. But there's also a place for, like you said, living a balanced life. And I'm like you. I tend to obsess, and I go in and I'll work 80 hours on my real estate, and it's not healthy. So I really like that post. That actually, at that point, I showed it to my wife. I said, I need to follow this guy's advice, and I need to I need to be content sometimes. I think with just following the system. I mean, real estate can be kind of boring sometimes. I mean, it's exciting and fun, but at the same time, buy and hold investing isn't. I mean, it's a pretty standard thing. You buy property that is going to go up in value and that has cash flow. And I mean, yeah. So anyway, very, very good article. And we will link to that in the BiggerPockets show notes at biggerpockets.com/show13. Yeah.
Yeah. I mean, it's definitely, that balance is important. I think you have to enjoy it, right? Like you said, you have to keep loving real estate. If you just give up, you hustle too hard, you burn out, and that's it. You give up the game way too early, and that's the hard part. Yeah, but like you said, you have to hustle when you start.
Yeah. Well, and I'll say, listen, I mean, for me, as I always like to say to everybody, I mean, family for me is the most important thing. And Brandon knows. He and I are on the computer on Skype every day. If my kids need me, I'm going to deal with my kids, I mean, and so I think, there's one thing to go out and build, this is a philosophy, right? You can agree or tell me I'm an idiot. I don't care. But, my philosophy is, listen, I mean, I'm doing what I do for my family, period. Right. And so if you work so hard that unfortunately, maybe you lose your girlfriend, but you learn your perspective, how to kind of create that balance so it doesn't happen again in the future. You've now learned that lesson so that you don't make, the mistake again. And now you kind of find a balance, or you find somebody who, works within the mentality that you have. Right. And so I think it's just important that we all kind of find our own balance and our own centers, and we all figure out what works best for us. But I think if you just work non-stop and, you're rich, but, are you rich in money or are you rich in life? And I always say be rich in life instead of rich in money. So, that's just kind of my take on it all.
Yeah, I definitely agree with you in that aspect. Yeah, I think it's the experiences in life that really makes what life interesting. It's not about how much money you have. So,
yeah, that's great.
That's great. Well, how about your investing? Have you considered investing elsewhere? Have you considered looking at different markets, for example, or do you have other types of focus in real estate, or let's talk about that a little bit.
Well, yeah, I have definitely considered that. I've looked at many different cities over the U.S., just different markets, but personally, I think what's most important is invest in your own home market. Just because you get to, the city inside out. It's very easy for you to get to the place, very easy to manage. Whereas if you were to say, I want to invest in Houston, I want to invest in Inland Empire, I want to invest in, let's say not Detroit, but, if you keep going over the place, all over, you just end up wasting airfare, time. You have a lot of risk because you have to build a team you could trust in those places, and you're way too spread out. With that being said, I think it's important to know what your home market is, right? If you live in Detroit, I'll suggest you invest elsewhere, but it really depends on how your home market is. And also, on the other hand, if you live in New York, LA, San Francisco, you're paying $500,000-$600,000 for a tiny home. You might only be able to rent it out for maybe $1,500 to $2,000. So you're getting a very low return, as opposed to, say, a market in Vegas where you're getting 7%. And if you compare, a 2% return and a 7% return, and you compound it over 15, 20 years, as Warren Buffett would say, that's the power of compounding, is extremely huge. You're earning a much greater return at a market where you don't have to spend as much to invest in.
And I think a big part of that too is, even a city like Detroit, there are probably a lot of areas around there that you could invest in. It would make sense. Same with New York. There's probably places. I know LA is insane. And, my good buddy, Arthur Garcia, who we had on podcast at number 6, he talks about, where he lives. Every property is, $600,000, $700,000, $800,000, but he drives 2 hours to invest in his area. And so it's a little inconvenient. He has to go out there, every couple weeks or whatever to drive a few hours. But, it works out for him because there's always somewhere you can go, usually within 2 or 3 hours driving, that you can invest in. So if you're located in an area like that, just look around. You don't have to invest in the city.
Yeah. And we're beating up on Detroit here. And, for good reason. I will say, I've personally been the victim of a declining areas, right? And so, it's, you might be able to pick up a property in Detroit for $5,000-$10,000, and you might be able to find a tenant. But if the jobs all go away, which is kind of the path that a lot of these Rust Belt cities are experiencing, unfortunately, and hopefully some of the politicians can figure out how to turn things around up there. It's a really risky bet. It's a really risky bet. And, I think there's a difference between informed speculating, and just flat out speculating, right? I could go and say, hey, I got a ton of money. I'm going to just buy up 50 houses in Detroit on the hope that, I'm going to get cash flow and whatever happens, but they might raise all those properties. They might, knock them down. Because they can't maintain them anymore, because they don't have now infrastructure and, police and fire to take care of. So, cities are shrinking. So, there's that risk. And I know we're beating up on Detroit here, but, it's time for any politicians who are listening to get their act together and figure out how to fix things. I mean, it frustrates me to no end. I'm going to just keep going on. So you better interrupt me. I'm going to go on a rant here, guys. You better cut me off.
No, I agree with you. It's definitely the fundamentals of, right? You can't, and that's why I go back about studying markets long-term, having a long-term planning, because if you just go into Detroit and just looking at right now, yeah, they're completely cheap. But, like you said, what's the city going to look like in 10, 15 years if they don't get their act together? That you're essentially taking a huge risk. So it's really about, you have to study everything when it comes to real estate.
No, that's great, Leon. That's awesome. So I want to go to one more thing before we kind of start wrapping things up. In a lot of your blog posts, you mentioned that now is the good time to invest in real estate. You've said it a few times that now is a great time. So can you expand on that? And why do you think now is such a good time to invest?
Yeah, sure. First, home prices have been depressed for quite a while now. I mean, sure, they're starting to go back up, and it might start going faster and faster. Who knows? But right now, at this point, with the low interest rates, with the low home prices, a lot of homes are affordable, and there haven't been that many times where it's cheaper to buy a house than to rent. Rent hasn't felt as much as home prices. So you're still getting a good return on your money. And especially with the economy right now, think about people like pension plans, retirees, savers. They're getting what, like 0.5% money on their bank.
Yeah.
They're getting like 2% on a government bond. I mean, that doesn't even go above inflation. If you just leave your money lying around there, you're losing it all. And, so what are the other options? You invest in a hedge fund, in the stock market. Those are extremely volatile markets, as Josh will probably tell you. So it's that kind of, you have to look for safer investments. And I think real estate at this point, it's extremely safe, given that even if you you get a loan, you leverage your deal, you're still getting a good rental income compared to the payments you have to make. At 3 or 4%, it's never going to happen again. And personally, again, I think inflation will hit the U.S. within 3 to 5 years. We already see that. Little things like gas prices.
We're seeing it, man. Inflation has definitely been here over the past, bunch of years. I mean, groceries, yeah, you name it. I mean, it's here. It's here.
Yeah, Big Macs, they're what, tiny sliders now? Like you can't even eat on the airplane. It's things like that. There's not enough alcohol content in your drinks now. So they're cutting. That's the cutting it that way. There's one way where prices go up, and one way quality gets worse. But it's all about, that's going to hit us. And if we don't own anything that's real, which could be houses, a barrel of oil, gold. If you don't own those things, paper is going to worth a lot less over time. So you want to own something. And I think real estate, having a home, two important things, right? You need food and shelter. So I think shelter is one of those things. I don't think anyone, can all buy a farm and grow their own food, but they can buy a house, and that will protect their value of their asset, whatever money they had at that point. Real estate always goes up with inflation.
Nice. Well, it doesn't always go up. We get the wiggle wobble. Yeah, for sure. So clearly you're a bright guy and you get it. And this is really interesting stuff. And we can kind of sit here and banter about what the market's doing and where it's going. I think ultimately it's important. Kind of the message here is people need to understand markets, and people have to have knowledge of the fundamentals because it is important. Just knowing the price of a single house isn't necessarily enough. And I know, again, I fell victim to this when I had property whose properties around it started to become dilapidated and started to become vacant and problem properties. And suddenly I found myself in a situation where I couldn't keep tenants and I couldn't sell the darn property. And I had, I was in trouble. I was in trouble. And it was because I was not paying close enough attention to what the market was doing. And so that's, I think it's so important for people to really pay attention and understand that. But with that, we're starting to get to the end here of show 13, biggerpockets.com/show 13 on the show notes. So let's get to our famous final questions here. Let's start with our favorite real estate book. What's your favorite?
Favorite real estate book, huh? Well, I would say it's the BiggerPockets Beginner's Guide.
Yeah, the ultimate
That's
beginner's
good,
guide.
guys.
Nice plug, man. Biggerpockets.com/UBG for those of you who want to check out the ultimate beginner's guide.
And it's
seriously,
free.
It is a free book. But Leon, come on, man, give us another book besides ours. Although we'll certainly let you plug our book all you want.
Well, I read too many real estate books, but I would just say I have to give it up to Rich Dad Poor Dad, as that's what got me started. Not the greatest book in the world, but still got me started, and that was what launched where I am today. So I thought that was really helpful in kind of understanding the concept between being a worker and being a investor. So
got it.
Cool.
Got it. All right. And how about your favorite non-real estate business book?
Well, Investment Biker by Jim Rogers. He does a lot of traveling. The way we talk about markets, he went to everywhere, just to see what different countries are like. And I thought that was really interesting, as he was able to predict a lot of things that's happening 10 years in the future. And he was able to see, how countries are doing. So that kind of inspired me to hopefully one day do the same, travel everywhere, just, maybe hopefully, provide that kind of insights to other people, if I can.
And what is the significance of a penguin?
That's this is what happens when you have to make up a name in the middle of the night. It's all right. Well, the story goes to back in the days when I was going to when I was in high school in New York. We had the phase where we wear really baggy pants, and you don't have belts, so you kind of have to waddle a little bit as you walk. So, yeah, that's where one of the get called penguin for that.
That's
Leon,
funny.
the baggy pant penguin. That's awesome.
Yeah.
That is awesome.
And of course, that relates to your website, which is
Okay, hardworkingpenguin.com. Just
There you
one
go.
penguin, no two, just one. Hardworking, not really, but do make a visit. Read the finance stuff, the real estate stuff. I do try to, again, it's about getting a well-rounded education. I think that really helps everyone to become a better investor. Better with their money, things like that.
What about hobbies, Leon? What do you do for fun? I know you travel, but
I like to travel. I like to eat. I like to eat a lot of different things. I was born in China, so we're taught to eat everything that moves. So it's kind of cool. I try different cuisines. I really enjoy investing. I enjoy writing. Besides real estate, one day in the future, maybe I will look to invest in different markets. Again, I enjoy reading and getting a lot of knowledge, and that helps me become a better investor. So do try to tell jokes, but I don't think that's going well.
well, what about last question. It is the one that I ask everybody. And what do you think that sets apart the new investors who come and they succeed and they do well from those who come and disappear? What is it that sets apart the successful ones?
Well, I think it's the successful ones are the ones who jump into it and do it right away. They get right down to it. I think a lot of new investors, they might get scared by, what if this doesn't work out? Have I done enough research? Maybe it's not the right time yet. There's a lot of paralysis with, I think, the new investors who don't succeed. And, you can't get it right the first time. Everyone's going to make mistakes, but you have to learn from those mistakes. And I think a lot of the successful ones are probably the one that jump right into it and then figure it out as they go along, put themselves at risk, but just to make it happen. At least that's how I felt like when I first jumped in. So maybe I can't really call myself successful yet, but I do notice that if I were to say, oh, I haven't done enough research, I have to do this, I have to wait, maybe I need to talk to somebody, maybe this market is way too scary for me, then I would have never been here today talking to you guys.
Yeah, for sure. Sure. All right, Leon. So listen, where else can people find you? Obviously, they can find you on the Draggy Pant website, the Hardworking Penguin. No, the site is an informative, valuable website, which is where we found Leon. I see Brandon falling out of his chair. But they can find you on BiggerPockets, obviously, and we'll link to that in the show notes. Are you on Facebook, Twitter, LinkedIn, anything else? Can people connect with you there?
Yeah, I am on Facebook. Leon Yang, my name. There's a lot of them, so just try to find my face.
We'll link to it in the show notes.
I have Twitter, I think. It's Hard W Penguin. And LinkedIn, my name again. Look for Vegas, and you should be able to find me.
Nice. And we'll link to that stuff. Well, listen, man, it's been a pleasure. Thank you so much for coming on board. And of course, thanks for continuing to contribute really great content, great articles to the BiggerPockets blog. We appreciate having you on the show.
Yeah, and I really appreciate you guys giving me an opportunity, and definitely BiggerPockets is so great. It just taught me so much and gave me access to a lot of really good investors. So, I learned so much from it. So whatever I can do to give back, I'll do my best. And, this is a really awesome site.
Oh, thanks, man. Thank you.
Thank you, Leon.
All right, everybody. That was show 13 of the BiggerPockets podcast. Hopefully you guys found it to be valuable as we have. We want to thank, of course, our guest, Leon Yang, for being here. And, just want to thank everybody for listening. For those of you who are new to the show, if you found it valuable, we ask that you please go to iTunes to leave us a review. These reviews are really helpful in letting us get the word out to others about the BiggerPockets podcast. Also, we ask that you please subscribe to the show on iTunes as well. Each new subscription is really valuable. Of course, if you want to find our list of podcasts, just go to biggerpockets.com/podcast. And otherwise, if you're not yet a member of our site, we definitely want you to come and check it out. We, just like the show, our goal is to provide lots of valuable information and networking opportunities. So jump on at biggerpockets.com. Lastly, if you are not following us on Facebook, please do so. You can find us at facebook.com/biggerpockets. We've got lots of great interaction with everybody on Facebook. We share surveys and things, interesting tidbits and whatnot on our Facebook page. So, jump in, get involved, and of course, get involved in the BiggerPockets community. It's a great place to connect. So thank you for listening. Again, biggerpockets.com, podcast 13, and we'll see you next time.
You're listening to BiggerPockets Radio, simplifying real estate for investors large and small. If you're here looking to learn about real estate investing without all the hype, you're in the right place. Be sure to join the millions of others who have benefited from BiggerPockets.com, your home for real estate investing online.